Morning. I have my friend Dr. Jeff Duru. Is Executive Director Technical for Universal Insurance PLC. Dr. Duru, nice to have you. Good morning.
Good morning, Victor.
And how are you doing?
I'm doing great, and you?
Very good too. All right, then. So we'll come to some of your responsibilities with Universal Insurance PLC. But it is often said, Dr. Duru, that insurance is a risk bearer that shields one from unexpected happenings. So I just need to take a little time to break it down for our listeners this morning. What do we mean when we say insurance is a risk bearer?
Okay, thank you, Victor. So insurance is a means of protection from financial losses, in which, in exchange of fee, a party called the insurer would elect to indemnify another party called the insured against financial losses that may likely arise in the future. So insurance does this through risk transfer mechanism. That is, shouldering the risk faced by individuals, faced by corporate organizations, faced by the government. Those risks that stare them at their faces are borne by the insurance company. Insurance company, in exchange of that, take a token from them called premium, and in exchange, indemnifies them against what we call claim.
Right.
During the time of eventuality.
All right. So local
insurance company.
Yes.
Okay.
So in local parlance, we can say, I carry my wahala, I give it to you, and you take charge of it. Is it something like that?
Absolutely.
All right. So is it everything under the sun that can be insured, or perhaps what is it that cannot be insured in this world today?
Okay. Yes, we have what we call insurable risks and non-insurable risks. It is not every conceivable risk that are insurable. So we have the ones that we could insure. One is that for a risk to be insurable, the insured or the person or the policyholder must have what we call insurable interest in that property. It means that that person must stand in a financial relationship with that property, with his property, and that relationship must be recognized at law to guarantee him the right to insure that property. That is one. Secondly, a risk that is insurable must have financial value. It must be capable of being quantified in financial terms, because insurance pays for financial loss. So during loss or during claim, we will be able to quantify the value of your claim. So a loss or a risk that is just against non-financial value cannot be, insured.
Okay.
Then a risk that is insurable also must have what we call homogeneous exposure.
What does that mean?
Such risk must be affecting majority of people, not a risk that is affecting an individual. Because when we insure it, we should be able to mine reasonable premium that will cater for the eventuality when it crystallizes.
Right.
So that is why we say there must be homogeneous exposure.
All right.
It must affect, variety of people.
All right. So
then a risk that is insurable must be a pure risk.
Okay.
That pure risk must have a prospect of a loss, or at best a break-even. But any risk that has an element of gain is not insurable. Like speculative risk, betting, gaming, they are not insurable.
All right. Okay, so
then
betting.
The last one is that any risk that is insurable must not be against public policy. What the public is against. You can't go and start, insuring or paying compensation against what the public is against. Like somebody that is driving his motor recklessly, a reckless driver that is fined by government, you now go and compensate him against that fine. Public policy will not support that.
All right. Okay,
Thank
so
you.
I love the way you've broken it down. So betting, gaming, all those ones cannot be insured. But let's look at some other things. Some very, very, how would I put it now? Ambitious kind of risk. So if I want to go to space now, can you insure me?
If you want to go to space,
Yes.
well, if we look at it, the risk is certainty that you won't come back. Then we will not insure you.
Okay.
Because we insure risk against uncertainty. Something, yes, that can crystallize, but we don't know when it will crystallize. But if you are going to a space and we know that once you go to the space there, the person will not come back, the person will die, then no insurance company will be able to, insure the person.
If I want to go swimming now and I decide that I want to go and swim in the beach, go on the ocean, can that be insured?
If you know how to swim, you can be insured.
Okay.
If we can certify that, yes, you know how to swim, is a game. You can go swimming and come back, nothing happens. If you're a good swimmer, yes, we will insure you.
Right. Okay, so if there is storm, or there is riot, or there is a disaster, natural disaster, for instance, there's an earthquake, can I insure that? I mean, if I think that, well, this area I'm staying, maybe in Yanekwaja, in Ikeja, or in Victoria Island, there's a likelihood that a natural disaster could happen there. Can that be insured?
Yes, because we insure natural disasters like earthquake, like storm, tempest, flooding. Yes, but what we don't insure is a risk that is not fortuitous. That is a deliberate risk. If we know that those risks are accidental, it can happen. They are not. If they happen, it is not by your own volition. It is not you that crystallize it or made it to happen. Yes, we can insure you.
Okay.
Those natural disasters, we insure them, but not when they are deliberate, or you want to cause them to happen. Then insurance will not, give you that cover.
All right. So the last scenario I will give before we move on to the next, Dr. Duru, we had some protests about 2-3 weeks back. Let's assume that during the course of that protest, I went out with my vehicle and it was vandalized, totally destroyed. Will insurance pay claim for that?
Yes, insurance will pay claim for that if your vehicle insurance is extended to cover riot, strike, and civil commotion. If you buy the basic insurance cover that is not extended to cover riot, strike, and civil commotion, and you take your car out there and the car is destroyed, you might not get benefit or cover. But if you insure your car that is extended to cover riot, strike, and civil commotion, you will have cover. You have full cover.
So at the point of sale of those kind of policies, let's say the third party or perhaps the comprehensive, do insurance companies take some little time to explain the extensions? I mean, if I'm going to buy a policy from you now, I would expect that, okay, you just tell me, not apart from buying this, you can still have these more gains if you put this and put this. So do you guys do that job to explain it all to your potential buyers?
Yes, insurance, marketers or sales, team, they do that. Except if by oversight, perhaps they didn't sell it to a particular customer. Otherwise, they sell it during the course of their negotiation and discussion for sales.
All right, then let's talk about the insurance industry. As we speak right now, the last figure from the Nigerian Insurance Commission, NICOM, says a little over 3 million people have insurance policies in Nigeria. So we're looking at just maybe about 3% of the working population, so to say. And this is born out of the fact that the others are still skeptical because of some myths. There's some myths or some common beliefs about insurance that is not true. So I would like Dr. Duru to kindly take us through some of those age-long myths that is affecting the growth of insurance in Nigeria.
Okay, thank you, Victor. Yes, we have some age-long myths or what we call insurance orthodoxies that are no longer real with the reality of time. So one of them is that premium must be paid, annually. So before it was believed that insurance premium must be paid annually, notwithstanding the capability or financial strength or outlay of customers. But now insurers have now come to collecting premium installment. So you can pay your insurance premium quarterly or half yearly or annually.
Okay, so it can be staggered.
So that was, yes. It is now convenient for you to pay your premium. Then, insurance used to feel or think that there must be a host of documentation before you insure your property or before you make a claim. But now with the changes in the society or economy, those things are not played, and the necessary documents are expected of you to provide for insurance companies to give you cover.
Okay.
Then during claim processing, so it used to be that claims processing must be rigorous, so that they are looking at every nook and crannies, every loose end, to ensure that perhaps they will see one thing to stop them from, paying you your claims. But now the process is seamless, and the regulator also had made it as a law that if you know anything that you call a material fact or a very critical question you must ask from your customer, ask it during the time you are negotiating for the insurance policy, not during claims.
Okay.
And again, if there is anything that resulted in loss that is not very fundamental to the loss suffered, you shall not lay hold on it to repudiate liability.
All right. So
then,
go ahead.
Yes,
go ahead.
Okay. So it used to be that policy documents must be voluminous, very big, and it must contain the legal and technical jargons or terms. Now we simplify our policy documents to make communication easy and simplified for our customers.
Okay. All right.
It also used to be known that insurance business is for the old people. That was, how it used to be. But now we have young, smart guys that are now insurance in industry, cutting the short.
Okay. All right. Okay, so these are some of the myths. I also understand that some myths too. Some people believe that insurance is very expensive.
Yes. Some people also believe that insurance is very expensive, but insurance is not expensive. It's just because they are not aware. It's ignorance. Some of them, they feel that if I'm insuring my building that is valued maybe 2 billion, I'm expected to pay 2 billion. Some think insurance premium to be like that. No. The premium you will pay is just an insignificant, proportion of that of the value of your property. So you pay a very minute amount to get insurance covered. It is simplified. Premium is simplified. It's affordable now.
All right, then flash update coming in says it's a slow movement on K2 Ojota Bridge heading towards Alakbere. This is due to Total filling station dispensing fuel at the moment, coupled with a pedestrian crossing at Alakbere. We can also tell you better movement is being experienced at Adekunle descending towards Adeniji, while further movement from Adeniji reaching Asura is a steady moving traffic, slow and steady due to ongoing rehabilitation work at Sura, coupled with high influx. That's what you have on that entire stretch. Ikoyi axis is also very encouraging at the moment. Slight delays at the various sell points where you have filling stations there. Return journey very, very cool and calm up to Alakbere. All right, so that's what you have at the moment. All right, so let's get back to this. Some say back in the days, insurance hides under the small print, and they will use that at every point in time to say once it's time for claims, they would not agree. Is that also part of the myths as well?
Yes, it's a part of the myths, yeah. But now, insurance policies have been simplified. They are now readable.
Okay.
They are now reader friendly. Communication is fluid. Very simplified.
All right, very good. So let's talk about the principles guiding the practice of insurance. I know that in every profession in this world, there must be a kind of principle that will make you to really, really understand the profession. So let's talk about insurance. What are some of the principles guiding the practice of insurance?
Okay, we have about 6 principles guiding, insurance business all over the world. One of them is what we call insurable interest. It means that for you to insure your property, you must have financial interest in that property. And that financial interest must be recognized at law so that there is no question as to are you the owner of this property or you are not the owner of this property? If an insurable interest is there to guide against fraud, somebody will go and insure a property that does not belong to him and could set it ablaze or destroy it because he has no financial interest. If you know that you have financial interest in this property, you will not want it to be destroyed. So that's why insurable interest is one of the key principles of insurance. The second one is utmost good faith.
Okay.
Yes, insurance business is the only business or contract all over the world that is premised on utmost good faith. Good faith only. It means that if you are coming to insurance business, you must come with total truthfulness, because the knowledge of the property you are bringing to insurance lies with you as a customer. For example, insurance company can be in Lagos here, and you want to insure your building in a remote village, in a remote place in your village, far, that the insurance company could not have access to visit it to, survey or inspect the building. They will believe you that you have this property, this is the description of this property, this is the value of your property. So during claim, it is expected that when they go there, that description, that value, and everything that is associated with that property should be. So you must come with total truthfulness. Okay. That is what we mean by utmost good faith. The other one is indemnity. Indemnity is there to guide against making gain from insurance policy.
Okay.
Insurance is to place you back in the former position you occupied, former financial position you occupied prior to the loss. So it is not expected that you should make gain. If we allow policyholders or the insured making gain, then you will see that it will open the floodgate of fraudulent claims, and the insurance business will not be viable or profitable.
Right.
Then we have proximate cause. So when a claim occurs or a loss occurs, we want to know the root cause, the immediate cause of that loss. We want to know whether the insurance cover provided to you as a customer, the risk that is covered is what crystallized or resulted in the loss. If that is the case, yes, you have a valid claim. But if you say we should insure you against riot and perhaps lightning, and there is flood damage to your property, you see, you did not cover flood damage. You covered only lightning, or you covered earthquake. If there is flood damage, then insurance will not pay you because you did not extend their policy to cover flood. So that is what proximate cause is doing there. It is the immediate and effective cause that resulted in the loss.
All right.
Then we have contribution and subrogation.
Right.
Contribution is there to guide against double insurance, so that you don't insure your property, one property, with many insurance companies and try to claim the same value from each of the insurance companies, making gain. So
is it wrong? Is it wrong for me to insure one property with 3 or 4 insurance companies?
It is not wrong, but when there is a loss, you must not receive more than what you have lost. You must not receive more than the value of your property. You can't go to Cornerstone Insurance and insure your vehicle for 15 million, come to Universal Insurance and insure it for 15 million, go to Leadway and insure it for 15 million. Then when there is claim, you want to claim for 45 million. Remember, the value of your vehicle is 15 million.
Right.
In such instance, the insurance company will come together and pay you rateable proportion of the value of your car contributed by each of the insurance companies. It means that Cornerstone will pay you 5 million, Universal Insurance will pay you 5 million, Leadway will pay you 5 million. You will now have 15 million, which is the actual loss and value of your property, instead of making 45 million. Yes,
all right.
That's what contribution does.
And that's the fifth principle. Any other principle?
Yes, the last principle is what we call subrogation. So subrogation is the right of the insurer, having paid a claim, to stand in the position of the insured or the policyholder and avail himself of all the rights and remedies accruable to the policyholder. It means that when we pay you, for example, you have your car insured and that car had an accident, a very serious accident that resulted in a write-off or total loss of that vehicle.
Right.
The salvage that is left of that car, the insurance company will take it.
Okay.
So if there is any other liability or responsibility or benefit that is accruing to the policyholder against that incident, insurance company will start in the position of that policyholder and take the responsibilities and benefits of those benefits or the incident.
All right,
That's
then.
what subrogation does for us. Yes.
All right, then. Okay, then. We'll look at other principles as well. Lagos Traffic Radio 96.1 FM. If you're wondering who's speaking with me on the program this morning, I have Dr. Jeff Duru. He is the Executive Director, Universal Insurance PLC, and we are looking at how best to leverage insurance for protection in very, very challenging times. We're going to take a short break right now. When we return, we'll talk about the significance of insurance to a nation like Nigeria, and of course, challenging times like this, what we can do with insurance. A flash update from the control room says there's a picture. Of course, they've seen a man who committed suicide by hanging himself at Akpakun in Wards Oshodi this morning. That has been the discovery of our traffic managers. Of course, they're trying to see how they get the cops of that particular location. That's Akpakun in Wards Oshodi. We're going to take a short break. When we return, we'll hear from you too. That will be on 08099120777 and 09153877127. A brief break. We will be back.
Before na so wahala with law enforcement agent.
Yes, so hey, NIA don't upgrade the NID platform. Oh, now from your phone, you fit confirm your motor insurance certificate one time. Make sure say you no get wahala with our law enforcement agents. Them just dial *565*11# one hand and follow the direction. It go show whether na fake or correct insurance you get. Oh, it no hard and na sharp. But you to make sure say you buy your motor insurance from only registered insurance company to avoid wahala. This message now from Nigerian Insurance Association, NIA.
Lagos Traffic Radio 96.1 FM. Insurance on the Move is the program, and I have Dr. Jeff Duru. He's Executive Director with Universal Insurance PLC. We did tell you, those of you heading towards the Third Mainland Bridge, it's a slow and steady movement around K2 heading towards Alakbere. We have Total Filling Station dispensing fuel there, so that is also responsible for your movement within that particular location. We've given you the travel advice from the Aja corridor. It's still looking good, so to say, this beautiful morning. Yaba and Oyingbo. We can tell you Empire in what's Jibowu, Herbert Macaulay Way from Agnes connecting at Dekunle. It's moving very, very well. Likewise for the return journey, except for traffic light alternation delays that you might find at some locations along that corridor. Jibowu in and out of Fadei looking pretty good to go, and Jibowu connecting Yaba Phase 1 and Phase 2 is also okay. Moving inwards Ojuelegba Road from Yaba Flyover Bridge is very, very fine as we speak. All right, then, so Dr. Duru, I'm having some messages coming in, but quickly, I would like you to elaborate on, what usefulness insurance can bring to a nation like Nigeria. Quickly, if you can take that in 45 seconds or 1 minute, I would appreciate it.
Okay, thank you. So, insurance provides financial stability to individuals, corporate organizations, and also to the nation. So when there is a loss, if you insure your property and there is a loss, then insurance will indemnify you by making out the claims in terms of cash payment to the individual or to the nation or to the organization or to the government. So financial stability, it enables a nation to maintain level of financial stability. Then it guarantees continuity in the business. If you have insured your property and there is a fire damage to your factory or to your business premises, then insurance will provide the fund that we use to kickstart your business back. So we call it stimulus to business enterprise. Insurance will provide you the fund to come back to business. And when you are coming back to the business, the nation is also benefiting from it. Invisible earnings. So the insurance business that we earn by providing insurance services to people outside the shores of Nigeria, the insurance company will earn foreign exchange. And that foreign exchange is regarded as what we call invisible earnings to the nation, and it helps to maintain balance of payment. Then, investable funds. Insurance mobilize large savings that are channeled into the economy for development of the economy. They are involved in financial intermediation. That is bringing the surplus economic unit and the deficit economic unit in exchange of transactions, thereby mobilizing savings that are used for developmental issues in the economy.
All right.
So loss control and loss prevention. Insurance business is involved in loss control and loss prevention. That is a practical means through which the insured could minimize his losses through risk management techniques provided by the insurance company. So we provide risk management techniques to people that have insured on how to manage their business, on certain things they will do, on certain things they will not do that will, increase risk or minimize risk. So this will enable them to have a loss control or minimal risk exposure in their business.
All right. I'm going to hold you on there because I'm having some messages that are streaming in at the moment. 08099120777. You can also add your voice to the conversation this morning. We're looking at the role insurance plays, especially at very crucial times like this, and how you can leverage it for your protection. This one says, good morning, Traffic Radio. It says, Dr. Duru, in these challenging times, what types of insurance would you recommend for individuals to get to protect themselves financially? This is Blessing sending this one in from Suleri.
Okay, yeah, thank you, Blessing. So it depends. The insurance policy you will take depends on the business you are doing. If you are an individual, perhaps you are a civil servant, you have vehicle, you have your household, or you own a property, fine, you will take a motor insurance policy to cover the risk associated with your vehicle, or you have a property, you also live in or occupy your property, you can take what we call house owners / householders property that will provide you cover against your building that you are occupying and the content of your building, against fire damage and against theft of the content of your property. Then if it is for business concern, we have fire insurance policy that will be taken to cover your business premises against fire and extraneous perils damage to your building. We have, if it is factory or large concern, we have what we call business interruption insurance or loss of profit insurance that will grant you cover against the loss of profit you would have made consequent upon loss or damage to your business premises.
All right, so if you have any business that you're doing, the best way is just for you to go and insure it. That's what it means.
Absolutely.
All right, this one says, good morning, Victor. For someone trying to ensure their insurance coverage is sufficient during tough times, what steps would you suggest? What steps would you suggest they take? That's number one. It says, and are there any specific guidelines or tips you could share? It says, I am I cannot see this name. Is it Oyinazu or what? From Ojo. Okay. All right. So that's it's just more or less like asking for advice. This one says, good morning. It says, good morning. It says, many people are trying to save money during these economic hardships. How can they avoid being overinsured or underinsured? You didn't put your name, by the way. This one says, good morning. It says, when picking an insurance provider in difficult economic times, what key factors should you consider to make sure they are choosing well and choosing right? Thanks. Ada is sending that one in. And this one says, good morning, Traffic Radio. Please, I'm curious, is it more advantageous to have one comprehensive insurance policy or several individual ones? Leke is sending that one in. All right, so maybe we can just begin to respond to all of this in short times because of our time constraints. Starting from the last, Leke is saying, can I pick just one comprehensive policy or should I have, the comprehensive ones in different forms? I mean, the third-party ones, rather.
Okay, so he should have a comprehensive policy to cover his vehicle.
Okay.
One comprehensive policy is enough, provided you insure up to the full value of your vehicle.
Okay.
You don't have issues, yes. One comprehensive motor policy is enough.
All right. So let's address Ada's concern. What are the factors to consider when picking an insurance policy in difficult times like this one?
Yes. The key factor you should consider is inflationary trend. In a volatile economy like what we're experiencing, prices of goods and services keep on increasing, keep on changing. So you must insure up to the full value of your property. Then at renewal, you also revalue your property to ensure that you are insuring up to the full value of the property.
All right. So if I insured for 14 million last year, and by this year, the value has gone to like 30 million, so I'm supposed to come and revalue it or review the insurance policy? Is that what it means?
Absolutely. Okay. Yes.
All right. Let's quickly talk about underinsurance and overinsurance. Somebody sent this question in. He says, how can they avoid being overinsured or underinsured?
Okay. You can avoid being underinsured by revaluing your property as at when due during the time of inception of the policy and at the time that you are renewing your policy.
Okay.
Because we have consequences for underinsuring your property.
Right.
If you underinsure your property at the time of loss, you will bear a proportion of the loss.
Okay. Let's take it home. Let's take it home this morning because of time now. Dr. Duru, what's your parting thoughts to our listeners? What's your advice as it relates to insurance in these very, very crucial times?
Okay, my advice to the insuring public or the listening public is that everybody should seek insurance cover. Insurance should be like a fulcrum upon which you can ride to ensure financial stability at this critical time. It will guarantee you continuation of your business. And insurance gives you peace of mind. Peace of mind. In this turbulent time,
right,
once you are insured, there is calamity, there is incident, there is turbulence happening.
Right.
Your mind will be at rest that if anything happens to me, insurance company will pay me claims that will not mobilize me to, continue my business.
We have to leave it at that for now. Dr. Duru, it's nice having you on the program this morning. I say a very big thank you to you for connecting with us.
Thank you, Victor. It's a pleasure.
All right. He's Executive Director with Universal Insurance PLC. And this morning we'll be able to navigate you through the intricacies of you having insurance for protection in very, very challenging times. Dio Anthony has produced the program. I say a big thank you to you. Same to our guy. I'm talking about Sojioni, who is Controller Technical for the Nigerian Insurance Association, working tirelessly behind the scene for this program to come on stream every Tuesdays. Ayoluwa Oluwaseun also in the building as well. Gomez Olamikposi is also in the building as well. I say a big thank you to Deborah Bolodioku as well as to other social media